Hello from Ibiza. This is Nico. I'm glad that you're following me on a new episode of the blog. I'm in the middle of my summer holidays in Ibiza in Spain. There are signs of inflation everywhere, but people still come. The place is packed. They are spending their savings. We will be seeing high inflation for some more time, and people still have money to spend. It will take some time for the European Central Bank to slow down the spending and the consumption. Anyway, the title of the last 2 weeks will be something like bad news are good news for investors. We have seen the ECB 2 weeks ago to raise interest rate hikes by 50 basis points, which means trying to slow down the economy and increase the cost of money by more than the market expected. We have seen the Fed hiking by 75 basis points another time, not unexpected, but 275 basis points hikes in a row have not been seen for many years, and still investors digested the news very well because hiking central banks are getting closer to the end of this hiking moment, and they will be able to control inflation. And anyway, by slowing down the economy, we are getting closer to a recession, and so inflation will be killed at some point. What has surprised me the most in the last few days has been that many parts of Europe, but Germany, have published a better than expected GDP result. We have seen rising stock markets in the main regions, good performance of fixed income. Of course, when we have no problem with rising yields, investors make money in fixed income as well. We actually have seen compressing yields. The treasury market over 2 years at 2.78, 2-year treasuries at 2.9. So we keep on having an inverted yield curve, which means that investors see a recession at some point in the next 12 to 18 months. This inversion of the curve with shorter dated treasuries, which have higher yields versus longer dated treasuries with lower yields, continues. In both parts of the curve, we have seen a movement of yields going down, which means prices up in government bonds, which means happy investors there. Well, now it is the point to understand what to do with our investment portfolio. I think we need to do a couple of things. On one side, we have seen a good recovery of fixed income and we wanted to stay invested. We didn't want to have fixed income for a number of months because inflation was going up, hiking central banks, yields were going up, and we were just losing money. In the last few weeks, fixed income has done well in this belief that a recession is coming. Too well. So the idea is not to add a lot of fixed income because we have already seen a good recovery of the asset class, but we need to keep it in our portfolio because the closer we get to a recession, the more we need to have a hedge, a protection. Without expectations of seeing an amazing summer of compressing yields and spreads in corporate bonds, we still want to keep an allocation on liquid government bonds, the side of the treasuries in the US or German bonds, in a neutral position for me. Whatever it is your portfolio, whatever it is your sense of neutrality, I would not be short at this point, I would not be long, I would keep it neutral. My preference is to be on longer dated fixed income because in the short term, we still have hiking central banks. Yields in the short term, which are likely to go up more than what is going to happen to the longer part of the curve. So longer dated fixed income, neutral position, that's something that is going to work for a number of weeks or months. In equities, we have seen a very good ride of high dividends relative to the market or value stocks relative to the market. But some of the themes that we have seen in the past are not working as well in the last few weeks. We are moving from slightly short to neutral stocks. We want to enjoy, hopefully will last for a couple more weeks, this bear market rally, and how we want less value and more growth stocks. So this is the information to keep it simple. In the next few weeks, we'll talk about sectors in more detail. Ciao.